Oil prices surged today before retreating slightly as markets evaluated disruptions to shipping in the Strait of Hormuz and damage to regional energy assets following exchanges of strikes between Iran, the U.S., and Israel. Let's bring in Rebecca Babin, senior energy trader and managing director at CIBC Private Wealth, for more insight. It's good to have you join us. Thanks so much.
Thank you for having me.
So Iran's Revolutionary Guard is now saying that the Strait of Hormuz is closed. I'm wondering what effect you're seeing in terms of the markets and oil prices now. They've, as we were saying, they surged earlier today, retreated slightly. What are you watching for?
So I think we're seeing two things in response to this. I think we're seeing a little bit of a rally off of the lows of the day, which was up around 6%. We're now up around 8%. So it's a 2% move on that headline. And the reason it's not more meaningful is because the Strait of Hormuz effectively was already kind of not seeing any traffic move through it based on the fact that many insurance companies were not willing to insure ships through the Strait of Hormuz. So traffic had already really been reduced to a very, very large extent. And so this headline does give us some escalation in terms of moving forward, that it will be targeted potentially by the IRGC, but the ships had already self-regulated. What we need to see now is some kind of game plan for how we do start to think about reopening the strait, whether that is something we've used in the past historically, whether it's a military escort, whether it's providing self-insurance for ships. So there needs to be some thoughts about how we can start to see ships traffic through the Strait of Hormuz, because really we don't have a lot of alternate routes. Unlike the Red Sea, where the Houthis were very active targeting vessels where you could reroute around the Cape of Good Hope, that doesn't exist for the Strait. We have some pipeline capacity that could be utilized from Saudi Arabia, which is around 3 million barrels of crude potentially. But again, that's not entirely safe either. That has been targeted by Iran in the past. So looking for solutions there will be critical. Another thing that happened when we saw this headline hit this afternoon is we saw option volatility spike up again. Option volatility had actually been decreasing throughout the day, and this headline did create a spike there. So having a reaction in the market, but not a significant one just yet.
You talk about, the solutions and how there needs to be, solutions looked at in terms of reopening the Strait of Hormuz. I wonder how long that could take, and also how long do you think global markets will kind of absorb this disruption?
So I think that is the most critical question in the market right now, is the duration of this potential disruption. And I think the way the market's looking at it right now is they're saying, okay, how much storage capacity do we have in the Middle East to absorb flows that are no longer able to travel through the Strait of Hormuz? In the UAE, Saudi Arabia, they think they have around 25 days of storage capacity that could be filled before you have to look at shutting in production, which would have a pronounced impact on crude oil prices. Iraq, which does ship through the Strait of Hormuz, around 3 million barrels, does not have the same amount of storage capacity. So those shut-ins could take place sooner. The other key buffer the market's looking at in terms of if those barrels aren't moving through the strait is the amount of strategic petroleum reserves that have been built up in China. China was very aggressive throughout all of 2025, stockpiling crude, as well as in the beginning of 2026. They have a buffer there. They are the main buyer of most of the crude that travels through the Strait of Hormuz. So that buffer does have an impact on how the markets react. But if we start to look at a longer than a month, there will be a significant repricing of crude higher if there's not some flow through the straits.
Interesting. Okay, so I believe you said 25 days before some producers would need to start shutting down production. In the meantime, though, do Middle Eastern producers need to adjust their output and production in some way before that time period?
So in the meantime, I think there will be adjustments that are made that can be made. It's not something that you can adjust as a flip of a switch. So those things tend to take a little bit of time. But I'm sure that there will be absolutely as many adjustments that can be made in the short term as can be. But I wouldn't expect that that would be a valve that will alleviate the timeline of this. What's really going to change how this plays out is if we're able to start seeing traffic through the Strait Strait of Hormuz, even on a limited basis, would be a significant, would extend that timeline significantly. So I don't think that the adjustments will move the needle as much as we would need them to.
You mentioned some of the countries that rely on the Strait of Hormuz already. I'm wondering, do any of those countries have like alternate routes to get their crude to export markets?
So broadly speaking, not really. Unlike the Red Sea, there isn't another route that can be used effectively to transport the crude, which is why this has always been the crown jewel of Iran's kind of strategy, is to threaten closure of the Strait of Hormuz just because of this exact fact. So that is the key element. That's the leverage point. It's about how we are going to be able to respond to this so that there could be traffic that can move through. And that's yet to be determined, which is why you're seeing the prices move as much as they have. You're also seeing this impact in LNG markets. LNG travels through the Strait of Hormuz, and that has even less spare capacity than crude oil does, which is why you're seeing somewhat more of a move in LNG markets today than you are in crude.
Okay, we will leave it there. I believe we're out of time. That was Rebecca Babin, Senior Energy Trader and Managing Director at CIBC Private Wealth. Really appreciate you joining us and giving us that insight. Thanks so much.